David, I don't know if you just heard that conversation, kind of want to talk to us about how, so what do you do investment-wise? You just put it all in the S&P and don't worry about it? Just hope for the best? The Fed's got our back?
Oh, no, you can do a lot better than that, Kelly. For sure. There's a lot of opportunity out there, and I think you have to realize that the Fed is out there. They're looking at it. John Williams said this morning about the inflation being too high. It is a concern, but I think they're going to let it ride for a little bit. So I think being a stock picker in this market right now is really, really key. And managing your risk is going to be essential because there's going to be some choppiness. Like you talked about the PCE and the inflation numbers coming out here in the next day and week. We're going to have some opportunity where the market's going to provide. And when you're ready, it's time to pounce on some of those names.
You're a little more in the Kelly nervous camp. You note that the economic surprises have turned lower. At the same time, inflation surprises are reaccelerating. So where does that leave? So what kind of stocks do you pick in that environment?
Well, I think you have to be really cognizant of high earnings and high quality. I think you have to look for some good opportunity in a variety of different industries. I think you need to be diversified there. And just make sure that in some respects your risk and return targets are well. So, for example, Qualcomm has high quality earnings. I call it the risk managed momentum. If you look at their trend, you look at their volatility, this risk managed momentum is doing very, very well for Qualcomm. And its revisions are up 5% since March 31st. So I think this is a really good stock, and especially if there's any pullback to get into here. And it's a play there a little bit in AI as well. So that's a really good one, I think. There's some other positions out there I would look at if you're looking for global income, for example. ING, I think, provides that. They have excess capital positions. They had a very, very strong results. They have a lot of income growth that was more than expected. And let's talk about this. A 9% dividend yield.
Wow.
That's a pretty good play while you wait for a choppy market. And if you're a small cap player, I'll give you a small cap one too, ASC. This is a shipping company. They have very, very strong financials, very low debt, high ratings. I think their valuation is still very cheap here. And for a small cap company, it carries a 5% yield. So I think there's some really good opportunities out there that I would look to.
You're brave. Going for a shipping name right now. You've got ING with the 9%. You're not worried about that 9% dividend? That's usually, here comes Nervous Nelly again. I don't know. Is that sustainable?
Well, it is, but I would say this. You need something to be able to look for the choppiness ahead. And this is a really good, well-run company. And they have excess capital position.
Yeah.
So I think for right now, you're going to wait out this choppy summer, maybe sell in May and go away type of thing. Maybe there's a few names you want to hold, and these are some names you want to hold. There would be some other ones that carry a lot more risk that I'd look to avoid.
I want to circle back to that in a second, but tell me top level why you track the Mag 7 versus the Economic Surprise Index. What are you looking at there? What does that tell you? And how does that inform your kind of stock selection process or tell you about the market?
Well, I think there's a couple different things that we look at, but one is concentration. We know that concentration either is going to go one or the other way, and it's either going to spread to the other 493, right? Or they're going to peter out, and we're going to have a more sustained down market. So we're cautiously, I would use these words, Kelly, we're cautiously optimistic that it will spread. But it's going to take a little bit of time. And boy, we've been waiting for 18 months now, and it really hasn't done very well. So I think we look at these economic surprises to say, is it spreading? Can we trust the rest of the index? And the reality is right now, not as much as we'd like.
Oh, that's really
if you're in the Magnificent Seven, stay there.
Okay. All right. I appreciate that. That's a little bit of a different take. Then finally, just two names you want to avoid, and one of them is kind of a deep tease to next hour, so I want to mention it. Lululemon. Athleisure for the ladies is over. Denim is in. We'll have more about that, like I said, in Power Lunch. Target is also a name you're avoiding. I don't know if you want to mention anything. Are there retail stocks you'd buy here or no?
Well, I mean, let's face it, the retail numbers this morning, you look at Kohl's, it's really had a terrible morning, and that's too unfortunate for those shareholders. But the reality is that the whole space isn't doing as well as we'd like. So there are some names that I would avoid. Lululemon has terrible risk management momentum. The departure of the chief product officer, I think, hurts the company. It has negative industry trends, like I just mentioned. And I think they've had some market saturation. Mm-hmm. You're going to talk about that in the next hour. I think that's a perfect lead in. They have fewer new stores. Their expansion slowed down. So I would look maybe elsewhere. And Target seems to be struggling with their identity and with their focus. And they're trying to get back on track. And even their individual transaction amounts have declined. So those who are shopping are spending less. So until those issues are addressed, I'd look other ways. Maybe a name that I would throw out there is like Nike, for example. I know this is a company that's a little bit widespread, still susceptible to some of these things, but I think it's a stronger play there for individuals if they're looking to ride out the summer.
Which name was it? Did you say Nike?
I said Nike.
Wow. All right. David, thank you. I was Abercrombie, but, it's had such a run-up. Again, stay tuned. David Harden, appreciate your time. Thank you for joining us today.